Hey everyone, welcome back. Today we're diving deep into the untold story of how the very foundation of American capitalism was laid. Imagine New York City in the late 1700s, a bustling port, yes, but its financial heart was surprisingly disorganized. There was no grand exchange, no towering building, just a scattered collection of merchants, auctioneers, and traders doing business wherever they could. It was chaotic, opaque, and frankly, a bit of a Wild West. The newly independent United States was finding its feet, politically and economically. It desperately needed capital to grow, to fund its infrastructure, and to solidify its new government. The nascent financial markets, driven primarily by government bonds issued to fund the Revolutionary War, were critical. But without any central authority or rules, prices were wildly unpredictable. This volatility made investors wary, hindering the capital formation vital for national growth. Trust was a scarce commodity. Most of this early trading happened informally, often right outside a popular spot called the Tontine Coffee House on Wall Street. This wasn't a formal market, it was a gathering place. Brokers and merchants would meet, exchange information, and make deals. Picture a busy coffee house, filled with cigar smoke and the buzz of whispered conversations, deals being struck on napkins. While it fostered connections, it also meant that information was asymmetric and manipulation was rife. The system was ripe for exploitation. Many securities transactions went through public auctions, where auctioneers were the primary intermediaries. These figures often held immense power, controlling information and sometimes even manipulating prices for their own gain. Adding to the disorder were outsiders, individuals who weren't part of any established network, swooping in to make quick profits, often at the expense of more regular dealers. This lack of a cohesive structure created an environment of distrust and instability. Something had to change. The established brokers, the ones trying to build a legitimate business, faced a major problem. They lacked a system for fair compensation, and the constant competition from auctioneers and outsiders eroded their margins. More importantly, there was no guaranteed trust. A deal made one day might be reneged on the next. Investors were hesitant, fearing scams or unfair prices. This uncertainty strangled growth. The brokers realized they needed to protect their interests and, crucially, instill confidence in the market.
Wall Street itself, named after the defensive wall built by Dutch settlers, was already becoming the de facto center for finance. Its location, close to the port and major businesses, was ideal. It was where the financial power brokers congregated. The very name evokes strength and permanence, yet the trading happening upon it was anything but. This street, destined to become synonymous with global finance, desperately needed a robust, transparent framework to match its growing ambitions and reputation. While not a full-blown depression, the financial landscape in 1792 was certainly rocky. A speculative bubble in government debt and bank stocks, fueled by over-optimistic investors and aggressive borrowing, began to show cracks. William Dewar, a prominent financier, orchestrated schemes that eventually collapsed, sending ripples of fear through the market. This instability highlighted the urgent need for safeguards and regulations, pushing the more responsible brokers towards collective action to prevent future chaos. Something needed to be done. Amidst this turmoil, a few leading brokers started to imagine a different way. What if they could eliminate the uncertainty of fluctuating commissions and unreliable counterparties? The idea was revolutionary: a fixed commission rate and a commitment to trade only amongst themselves. This closed circle would ensure trust, transparency, and stability. It would protect their livelihoods, yes, but also professionalize the entire process. This was the spark that would ignite a financial revolution. And so, on May 17, 1792, a small yet profoundly significant gathering took place. 24 of New York's leading brokers, weary of a volatile market, met under a large buttonwood tree on Wall Street. This wasn't some grand convention, but a quiet, almost secret meeting, driven by mutual self-interest and a desire for stability. The location itself speaks to the informal, grassroots nature of this pivotal moment, where American finance was about to be reshaped forever. What emerged from that meeting was a deceptively simple document, now known as the Buttonwood Agreement. It was just a few lines, pledging to trade stocks and bonds only amongst themselves and setting a uniform commission rate of 0.25%. This wasn't a government decree, it was a private contract, a handshake deal among rivals. But its simplicity belied its power, fundamentally changing how securities would be bought and sold in the nascent American Republic. It was a foundational moment.
The first crucial provision was exclusivity. The 24 signatories agreed to give preference to each other in all our negotiations. This meant cutting out the unreliable auctioneers and other outsiders. It was a move to consolidate power, yes, but also to ensure that transactions occurred within a trusted network. This created a strong incentive for others to join or to respect the new informal rules, fostering a sense of professionalism and shared responsibility among the established brokers. Order was taking hold. Equally vital was the establishment of a fixed commission rate, 0.25%. Before this, fees were negotiated individually, leading to confusion, unfair pricing, and intense competition that drove down profits. By standardizing commissions, the agreement ensured that brokers were fairly compensated for their services. This didn't just benefit the brokers, it also brought transparency to investors, who now knew exactly what they would pay, fostering confidence in the newly structured market. It was a game changer. This private agreement wasn't just a handshake, it was the birth certificate of an institution. The signatories began meeting regularly at various locations, formalizing their operations. In 1817, they officially renamed themselves the New York Stock and Exchange Board, solidifying their identity and purpose. This was the direct ancestor of the modern New York Stock Exchange. From a gathering under a tree, a structured, formal entity began to emerge, ready to shape America's financial future for centuries to come. With the board established, rules became paramount. Members had to adhere to specific trading times and procedures. Disputes, once handled through street brawls or ignored, now had a formal arbitration process. While still rudimentary, this was a massive leap from the previous chaos. These initial rules created a foundation for fair play and accountability. The transition from informal agreements to institutionalized governance meant that investors could finally have greater faith in the integrity of the market. Trust was being built. What were they trading in these early days? Primarily government bonds, those vital instruments issued to pay for the Revolutionary War. Also popular were shares in the new banks, like the Bank of New York and the First Bank of the United States. These weren't speculative tech stocks, they were foundational assets, crucial for funding national development. The exchange provided a vital secondary market for these securities, allowing investors to buy and sell freely, turning static assets into liquid capital.
Through the 1900s, the New York Stock and Exchange Board, and later the NYSE, steadily grew. As America expanded westward and industrialized, so too did its need for capital. The exchange provided the platform to raise funds for canals, railroads, textile mills, and emerging industries. From a small group of 24, the membership grew, and the volume of trade exploded. This wasn't just about making brokers rich, it was about building the sinews of a new national economy. Wall Street, thanks to the NYSE, quickly became more than just a street. It became a symbol. It represented opportunity, wealth, and the engine of American enterprise. This transformation was remarkable, going from a mere defensive barrier to the undisputed global capital of capital. The perception, both at home and abroad, was that if you wanted to finance a big idea, if you wanted to participate in American growth, Wall Street was the place to be. It was the financial heart of the nation. The organized, trustworthy environment created by the Buttonwood Agreement attracted not only domestic investors, but also crucial international capital. European investors, previously hesitant due to the chaotic nature of American markets, now saw a legitimate avenue for investment. This influx of foreign money was indispensable for a young nation with vast ambitions but limited internal resources. The NYSE became a bridge, channeling global wealth into America's burgeoning industries. It was truly transformative. The NYSE's role in funding America's Industrial Revolution cannot be overstated. From the early 1900s onward, it was the primary mechanism for companies to raise massive amounts of capital from a dispersed pool of investors. Entrepreneurs with grand visions for factories, mines, and infrastructure projects found their funding here. Without this organized marketplace, the scale and speed of American industrial growth would have been severely hampered. It was the crucial accelerator for progress. Of course, the NYSE didn't eliminate financial crises entirely. America still experienced numerous panics and depressions throughout the 1900s, but what the structured market provided was a more resilient framework to absorb these shocks. Information could disseminate faster, and mechanisms for intervention, though imperfect, were gradually introduced. The institution itself, founded on principles of order and trust, endured, adapting and evolving rather than collapsing entirely. It became an enduring force.
Over 2 centuries, the New York Stock Exchange continued to evolve, moving from its coffeehouse origins to its iconic building on Wall Street. It embraced new technologies, from ticker tapes to electronic trading. While the methods changed, the core principles established under that Buttonwood tree, order, transparency, and a structured marketplace for capital, remained constant. It adapted to countless technological, political, and economic shifts, always retaining its central role. Today, the New York Stock Exchange remains one of the world's most influential financial institutions. Its daily operations ripple across global markets, affecting economies from Tokyo to London. The capital raised and the wealth created on its floor continue to shape industries, fund innovation, and drive economic growth worldwide. This incredible global reach, this pervasive influence, all traces back to that unassuming agreement made by 24 brokers in 1792, a testament to its enduring legacy. The Buttonwood Agreement taught us a powerful lesson about the origins of financial stability. It wasn't born from government decree or grand ideology, but from the practical needs of individuals seeking order and trust. Their foresight created a self-regulating body that profoundly impacted capital markets. It's a testament to how voluntary cooperation, even among competitors, can build something far greater than any individual could achieve alone. Its principles still resonate in today's complex financial systems. From the chaotic, unregulated street trading of the late 1700s to the sophisticated global powerhouse it is today, the journey of the New York Stock Exchange is a remarkable one. It's a story of visionaries who understood that transparency, reliability, and structured interactions were essential for a functioning economy. The Buttonwood Agreement wasn't just about making money, it was about building trust, creating liquidity, and ultimately forging the financial heartbeat of a burgeoning nation. It set the stage. And the hard truth this story proves? That true economic power isn't just about grand ideas or vast resources. It's fundamentally built upon the quiet, deliberate creation of trust, order, and standardized rules. Without these foundational elements, capital remains stagnant, innovation falters, and economic potential goes unrealized. The Buttonwood Agreement isn't just a historical footnote, it's a living blueprint for how societies build prosperity out of chaos, one trusted transaction at a time. Thanks for watching.